Come on in, come on in, come on in, live. Come on in. I'm gonna give y'all time to get over here. Welcome everybody on Facebook. Welcome everybody on YouTube. Come on in. Thank y'all so much for joining us this evening. Oh, and we on time. We on time. So come on in. Tag a neighbor and tag a friend.
Y'all better get in here.
Yeah, they better get on in here. Get on in here. What's up, Marquita? Y'all come on in. Y'all look, come on. Come on. Tag your people. Tag your people. What's up, Tip, y'all? I can't see you all on here. I can see people on here, but y'all gotta speak. Good evening, good evening. Good evening, good evening, good evening. What's up, Lala? Hey, Jacoria. What's up, Janae? Janae, come on in too. I knew y'all weren't gonna let me down. Come on in, Tasha. Come on in, Jennifer. That, come on in. Y'all come on in. And tag your people. Come on in. Hey, tag your people. Tag your people. Oh, tag your people. I knew you were going to start acting up, Lala. He is happy. Come on in. Hey, come on in. Come on in, Latoya. Latoya, come on in. Jacoria, come on in. Jessica, come on in. Hey. Tamara, come on in. Dee, come on in. Faye, come on in. Lala, he ain't single. Baby, he can't mingle. My brother is married. Charlie's wife didn't carry. Yeah, come on in, everybody.
There you are.
Look. He ain't single, Lala. Oh, damn, no. What's up, Tasha? What's up, Courtney? What's up, everybody? Y'all, thank y'all so much for joining me. Y'all know we ain't on. So I'm trying to be sexy, and you just would not act right. But we are on here today to talk about something that is just so important, and especially I thank everybody for coming on here, and I know it's gonna be people of all races on here, a lot white as hell. You know what I'm saying? But especially in the Black community, I don't think that we take life insurance as seriously as we should. And when I was talking to my good friend, which his name is John Beverly, and he gonna introduce himself in a second, he was like, not only do we not take it as serious, but when we get it, we try to go the cheapest route, and we don't really understand what it is that we're getting.
Right.
So, thank you so much for being on here today, and if you could introduce yourself to everyone.
Absolutely. Well, first of all, thank you for having me. I'm it's a pleasure to be on this platform. I'm definitely glad that you gave me the invite to come and be on this show. I love what you do. I love what you stand for. We've known each other for a while, so I appreciate it. But my name is John Beverly. I am president, CEO, and a managing partner at Beverly Financial Solutions. We are a small minority-owned financial services company here in Atlanta, Georgia. We handle everything from life insurance to health insurance. We do retirement planning, annuities, IRAs, any and everything you can think of in terms of financial services. We we provide those services for the people. And not only do we provide those services, but our biggest thing is to help educate our people on what these services are and how they're able to use them moving forward to help put their family in a better situation in the long run. Everybody talks about generational wealth, but we actually teach people how to create those situations and scenarios for their family. So that's what we do.
Okay, look, y'all doing it. You doing a lot. Y'all got a lot going on. Y'all you covering a lot. So okay, the first thing that I want to talk about, lost some people. There you go. So the first thing that I want to tackle that you talked about is life insurance. With life insurance, like I said, life insurance is something that we all need, something that we all got to have, and there's no age, limit on when you should get life insurance. Like life insurance, you don't never know when you go. So as soon as you can get life insurance, you need it. First of all, what is the importance of having life insurance?
Well, let's just rip the Band-Aid off of this thing.
Rip it off.
Here's the thing. Life insurance really is there to take care of the family in an event of a death. If and when it occurs. Now, there are different, multiple types of life insurance, and we'll get into that in a little bit. But the biggest thing is you want to make sure that you have life insurance just in case the inevitable happens. You don't have to leave that burden on your family, because that's the biggest thing. You're not going to be here, but your family, your wife, your husband, your spouse, whomever, your kids, they're going to have to grieve that loss. And not only are they going to have to grieve that loss, but they've got to make sure that they have the proper funding to take care of all those expenses. And if we wanted to break life insurance down to its most simplest form, that's exactly what it is for. It is making sure that your family has an opportunity to breathe and really bereave while they're going through that process of a death, but then also so that they don't have to worry about, where am I going to get these funds to take care of this? How am I going to get this paid? Because everybody know GoFundMe. We don't want to do GoFundMe.
And having fish fries and
absolutely. Listen, the way inflation is right now, chicken wings and all that stuff is up. We don't want to do that. You know what I'm saying? So we want to make sure that we have our priorities taken care of, so they can handle that business. When the inevitable happens, that's the basic need for life insurance in a nutshell.
Okay. So if say I'm just a single person, right? Just a single woman, and I'm like, I got a job, I'm on my own now, what would be, if I say I need life insurance, this is my scenario, what would I do? How would I go about even obtaining life insurance, and what kind of life insurance would I need? Because we're going to get into the different types of life insurance.
Yeah, no, you definitely got to find you an agent and I say in your area. It doesn't necessarily have to be in your area. It just has to be an agent that services your state. So if you're in Nevada, or if you're in, California, whatever, you got to make sure you reach out to an agent who services and can actually produce in that state. That's first and foremost. And you can find those people anywhere. Trust me. They're all over Facebook advertising. If they're anything like me, you'll run into them because they advertise every day, all day. And then you want to do your due diligence. You want to make sure that you're getting your life insurance needs through a reputable company. What I mean, reputable companies, that means companies that are either A or A rated, with a firm by the name of AM Best. And what AM Best is, it is a company that basically rates life insurance companies. And so you want to be with a company that is either an A or an A plus. All right. Anything under that, you're running the risk of not having a payout. So you got to make sure that you're with those particular type of companies. And there are a slew of companies under those ratings. You just got to find the right one.
Okay. So the different types of life insurance. what are the different types of life insurance? And
Gotcha.
why are
And
they
that,
important?
yeah, absolutely. And so what I'll do is I'm going to segue
Okay.
this into the question that you just asked. So really, when it boils down, guys, it is two types of life insurance. All right, you've got term life insurance, and then you got what's called whole life insurance. Okay, so term is what it is. Term is going to be the cheapest. It's going to be the policy that you can get the most insurance on, but you only have it for a certain term. That means either 15 years, 20 years, 25 years, 30 years. I've seen some go up to 35 years. But with that, that means that you have that amount of coverage, could be 250,000, 300,000, whatever, for a locked in period of time. So once you hit that 15, 20, or 30 year, then guess what? Poof, you ain't got no more life insurance. It's gone. And then so you know that's what you run into when you get term. Now it's good. You need it. There's a need for that. But the second form is called whole life insurance, and whole life basically covers you for your entire life. That's why it's called whole life. Okay. Now with whole life, it's going to be a little bit more expensive, and here's why: because it does cover you for your entire life. But then it also has like a savings account mechanism to it, which is called a cash value account that actually accrues cash over time. So the more that you continue to keep paying into that whole life policy, then you're going to have like a reserve savings account built into that, in which you can actually borrow off of that money to use for whatever it is that you want to use for. Maybe you want to put a down payment on a house or a down payment on a car, or you want to help, your kid go to college. You can actually pay into that policy to be able to do that, which is the reason why it is a little bit more expensive than your normal term policy. So to piggyback that into your situation, what you told me, single woman working, hey, get you a $50,000 whole life policy, and you're good to go. You wouldn't need anything else because you don't have anybody to leave that to. Now, if you got kids and a family and all that, then you probably want to go with a term policy. So that way you can leave a legacy and take care of any of those assets that you have, like a house, cars, bills, etc.
Okay, so what you're saying, like with the term policy, and you were saying like it will take care of like different assets and stuff like that.
Mm-hmm.
How does that come about? How do you get that on a term if you have kids versus not having that on hold if you have kids, or is it the same?
Yeah, no. So here's the thing: when your term policy, you can have it set up however you want to have it set up. I would always say do a term policy with a will, so that way you can designate those funds for whatever you want to use them for. But when you do your term policy and or your whole life policy, you select who's going to be your beneficiary, and then your beneficiary is the one that'll carry out how those funds are going to be placed. Now, like I said, you need to make sure that you have a will attached to that, so that those funds, you have a plan for those funds, and they can be designated how you have it set up in your will upon your death. So that's how you do that with the term. So that'll take care of your assets, pay off the house, pay off the cars, pay the mortgage off. You designate those funds with your beneficiary through your will, and that takes care of all that stuff.
Okay. So when you are getting, like when you say, okay, so there's some way that you say that you can like pay into the insurance, and you could use that money for whatever it is that you want to use it for.
Mm-hmm.
What is like the percentage rate on it? Is that based on how much insurance you have? Is that based on age? Like how does that work?
Yeah, no, it varies because each individual life insurance company is going to have a certain percentage or interest percentage that they actually pay alongside of your premium payments. Now, of course, the larger the premium payment, the more you're going to have into your cash value. You know, if you got a $50,000 policy, let's just say, and it runs you, $15 a month. Well, we know we're not going to accrue a lot of cash value with a $15 payment every month. Most of that is going to go towards the death benefit. So of course, the more your premium, the more of that money is going to go into that cash value account. And then like I said, each individual company has, 2% to 4% in terms of interest that goes into the cash value setup as you're paying into your premiums every month, meaning that it'll grow at about 2 to 4, maybe 6% every year, or at least after the first 2 years, because the first 2 years, the money is going to go towards the death benefit.
Okay. So we have a question. Della Denson, I'm gonna take questions throughout the interview. Della Denson, she says, I'm late here, but why can't you purchase whole life on a felon?
Liz, I get this question all the time.
Okay, I'm glad you know. You in the right place, baby.
Man, listen, they do my felons wrong. They do my felons wrong out here, man. Look, them people that they've served their time, they've done what they needed to do. It's crazy. So here's the thing: they look at felons as a higher risk individual, and so what insurance companies, they don't like to take risk when it comes to people that they're insuring. So if they know that person has a felony or something to that degree, then they're going to deem them as a risk, and it's going to be hard to find insurance coverage on them. Now, here's the thing. Just because it's hard to find insurance coverage doesn't mean that you can't find insurance coverage. Listen, Beverly Financial Solutions can find them for you, baby. We get it done. So felons, whoever, listen, we get that work. We good. But yes, it does become a little bit harder for felons to get insurance. That is true.
Okay. I hope that answered your question, girl. Ada Lane Rugg says, what's the recommended age limit for getting term life?
Listen, get term life at the age of 18 years old. That's as soon as you can get term, you need to get it. And here's why I say that. If you get it at the younger age, you're going to get it at a hell of a rate, because you're going to get it at its youngest time that you can actually get insurance. So you get it when you're really, really young. And then also, because you're young, you don't have medical issues. And so by not having medical issues, you get an even greater rate because of that. So you need to get it as young as you can. As soon as you hit 18 years, I tell everybody, as soon as they turn 18, put a policy on them. Make sure you get it done. Don't waste time, because if you waste time, every single year, it's going to get a little bit more expensive, and then a little bit more expensive, and a little bit more expensive. So get it in, lock in that rate at a young age, and while they're healthy.
Okay. What's the best? Nicole, is it Nicole? Y'all know. Nicole, I think that's what it is. What's the best life insurance company you suggest?
So if I had to make two suggestions, would be Mutual of Omaha. That would be my first one. Foresters.
Okay, so let me stop you right there. Why would that be your first choice? What is it about them that you trust?
Well, Mutual is an A-rated carrier. It's an A+ rated carrier. Okay. They've been around for over 150 years.
Okay.
Their rates are very, very good as compared to other companies that I know. And then the last thing is, so here's another thing, guys. Mutual and a few other companies that I represent, they have what's called living benefits, guys. That is hugely important. Okay, let's talk about living benefits real quick.
All right.
You've got what's called a chronic illness. You've got what's called terminal illness, and then you got what's called critical illness. Of course, terminal illness means that you got anywhere from 12 to 24 years to live. All right. Chronic illness means that you've got like you can't do everyday living things. Like you can't clean yourself, you can't eat, you have to have someone to kind of assist you in doing that. And then critical illness is if I have like cancer, a heart attack, stroke, end stage renal failure, those deals there. Living benefits gives me the opportunity to actually use my death benefit while I'm still living. A lot of companies don't do that, and Mutual Omaha does. They have all three living benefits that will give you money off of your life insurance policy to kind of help take care of medical bills or whatever the case may be if you survive or if you're going through that deal. So Mutual Omaha, phenomenal company, top rated company. My first suggestion, and then my number two company would be Foresters Financial. Okay, they are the same way. Mutual and Foresters, their price level are very, very comparable to each other. You can't go wrong with either one of those.
Okay. So Janika Watson says, what about what is it? New York Life?
New York Life, NYL. Yeah. I mean, New York Life is a reputable company. Thing is, their policies are a little bit more expensive than I would like for my taste, for my people. They have a great product though. I mean, don't get me wrong. They cover their people. Their underwriting is not, well, no, their underwriting is kind of tough, but their pricing is what throws me off. And they're a little bit more expensive than I would like for my taste. But if you got some high rollers out here who like to pay some money on some insurance, then yeah, you can work with New York Life, but I just wouldn't suggest it.
Okay. All right. Jennifer says, is Globe Life a good company?
Yeah, if you like to be screwed, if you like to get screwed over, absolutely it is. So, I mean, I hope that answers your question. I wouldn't suggest it. I work with about 20 different companies. Globe is just not, it's not one that I would suggest. I've seen some shady things happen. I've seen some instances where they didn't pay out the death benefit when person passed away, and that's a little sketchy to me. I just wouldn't put my people in that situation. So yeah, if you like to be screwed in terms of your life insurance, and yeah, absolutely, Globe is great.
Okay, I got one more question before we move on. What about Gerber Life? Janae says, what about Gerber Life?
Do not fall for the Gerber Life trap. Okay, do not fall for it. They hit you with the baby policies at when they're first born, and then it's gonna double when they hit 18. And here's the thing with that. So they put you in a higher premium rate when you're young because they know it's going to double at 18. So they already basically put you in an 18-year-old premium when you get it young. The next thing is when you turn 18, you have to they will do a medical background check. So if you had any kind of medical situations or any kind of medical issues from 0 to 18, then they will ding you for that, and they may not cover you. So don't fall into the Gerber trap. There are so many different companies that are much, much better than Gerber, in my opinion. But they got the babies, and they put on the heartstrings because of the babies. But their coverage, I ain't gonna say nothing bad about them. I just don't fall for the trap. That's all I'm saying.
Okay, look, the question's coming in, so I guess we're gonna stay on the because I ain't gonna cut y'all off. I'm glad y'all asking.
Absolutely.
Do you work with AAA?
I do not. I do not work with AAA. Nope, that is not one of my carriers. No, I wouldn't suggest AAA either. I mean, these are companies. They're known for what? If your car falls apart and you need to be picked up, right. You know what I'm saying? Roadside assistance. That's what they're known for. So I'm not trusting them with life insurance when they're known for roadside assistance.
I feel the same way. Like I'm not going to a steakhouse and order chicken fingers.
Right.
Right. They specialize in steak. I want the steak.
Absolutely.
Okay, so our next question. Yeah, I am so glad that y'all I'm so proud of you. I knew this was gonna be a very important show, Jay. Chantel George says, what company do you suggest for a person that has heart issues?
Well, a couple things. Depends on age, first and foremost. I will say this: if a person is 40 years old, it doesn't matter what medical situation you have, you can get coverage. Now, you may not get the amount of coverage that you want. You may be able to get like 40,000. That may be the most. But if you've got any issues, heart issues, cardiovascular issues, kidney issues, COPD, if you're 40 and above, you're automatically covered. It doesn't matter. All right. There's a policy out there that will cover you. Where it gets a little bit tricky is for those who fall, 39 and below. That gets a little bit tricky because life insurance companies deem heart issues as a huge risk. And that can be tough for an insurance company to take on that risk and responsibility for anybody under the age of 40. But a company like Lincoln Heritage, they will cover anybody under the age of 40. So heart issues, medical conditions for anybody under the age of 40, Lincoln Heritage, they'll get it done.
And what about over the age of 40, you can get coverage through anybody.
Anybody, yeah. I mean, anybody can get coverage.
Okay, anybody can get coverage.
Right, anybody can get coverage. There's two companies that will cover anybody over the age of 40, and that is Great Western Life Insurance Company. And no, I'll take that back. Great Western is the only one that'll cover you from 40 to 50. Okay. When you hit 50. Then American General, which is AIG, they'll cover you at 50 years old with any issues.
Y'all, do y'all understand the wealth of knowledge that y'all sitting on here? John, look, and make sure y'all go follow John. John, where can they follow you at?
Man, please, you can follow me on my platform of choice is Facebook, of course. So you can follow me on there at John R. Beverly Jr. And then you can also follow me on Instagram at Beverly Financial. Okay. All right. And then you can also follow me on TikTok at John B. Money.
John B. Money. Okay. Markeisha says, what about Primerica?
I knew somebody was gonna bring it up. I was just waiting on somebody to bring it up. I knew it was coming. Here's the thing.
Don't do her like that.
Primerica does a great job at covering people. Okay. Let me just say that. They do a great job of covering people, but they cover people with the old life insurance. Okay. And what I mean by that is they only cover you with term. So if you wanted whole life, you couldn't even get it with Primerica. The next thing is Primerica only, remember those living benefits we talked about? Well, they only do one, and that's terminal. So if I had,
we talked about the critical, the terminal, and what else was it?
And chronic.
Okay.
Right. So Primerica only does terminal. All right, they only do the terminal living benefit. So that's kind of like the old life insurance. That's the way insurance companies used to do it. Now, man, you're able to get term, you're able to get whole life. Even if you want to say, okay, I want to start out with a term policy, but before my policy ends, I want to convert it from term to whole life. You can do that, but not with you can't do that with Primerica. So, so I hope that answers your question. I got a lot of friends who work for Primerica and they hate me. They don't hate me, But there's just a difference in opinion between myself and them, man. That's all. But they good people. They good people. I just definitely wouldn't put. I would put nobody in a Primerica policy. It's just my opinion.
Okay. I hope that answers your question, girl. Kelly, all things new says, what about credit union life insurance policies?
As long as they are accredited, credit union, they should be fine. I'm not really up to par with credit union policies. I just know a lot of people, a lot of companies or credit unions will offer life insurance to their people who are members of that credit union. So I would say this: if it doesn't cost anything or if it doesn't cost a lot, man, take advantage of the free money.
There you go. Jacoria, let me see what else. Wait. Jacoria Pugh says, what's the best company for elderly people that have health issues?
Yes, listen, this is my domain.
Okay.
Jacoria,
all right. Get back and take notes, Jacoria.
This is my thing. This is my wheelhouse. So my deal or my expertise and what I focus on are what we call final expenses. Okay. Final expenses are essentially for our seniors. All right. This is pretty much anybody over the age of 50 years old. Okay. With final expenses, Mutual of Omaha, Foresters Financial. Okay. Again, my two breadwinners, they will get it done. Lincoln Heritage is the next one. Okay. Now, it also depends on the medical makeup of that senior. If we've got a lot of medical issues, then guys, here's what we have to also get used to. We may have to dip into what's called a guaranteed issue policy. Okay. What that means is that the insurance company is going to insure that person no matter what. It doesn't matter. But they're going to put them on what's called a 2-year waiting period because they are that much of a risk. What the 2-year waiting period is, guys, is this. That means that you got from the time that person signs that policy to 2 years. If they don't make it, then the insurance company is going to pay their beneficiary all of their premiums back plus 10% on top of that. If they make it past the 2-year threshold, then they're going to completely pay the policy out, whatever that death benefit is. As long as you guys, as long as the premiums are being made, after 2 years, baby, that thing gonna pay out. So you got to just make sure that you do that and understand. Ain't nothing wrong with guarantee issue because some people walking around, they got look. If you can get HIV covered, then get the guaranteed issue policy. Because I can guarantee you, there is no other insurance company that's going to cover you except companies that take those guarantees. So that's it. But as far as the seniors, man, that's my thing. Listen, you need to reach out to me, and if you need some final expense insurance for your people, and we work miracles over here.
Okay, look, Tamara, ain't this? Oh my gosh! Like I'm just sitting here, just like this information that you giving us, John. I mean, he giving it to us right now for free. I mean, and he ain't got to do that. So, the information that you giving us, like this gonna be one of them shows that I need y'all to like go back and like rewatch it, right? Absolutely. And I need you to this the one I need y'all to shoot to y'all people through the inbox, and this is the one that I need y'all to be sharing on y'all page. Like this ain't one of them videos that you ain't gotta sneak and shoot it to DMs because I ain't cutting up on here. This is one of them shows that you can actually share it on your page. You can actually send it on your page and stuff because everybody needs this information, and he's giving us a wealth of information. I mean, something on here that I haven't thought about, because my mom is like just the most independent woman in the world where everything is just so taken care of and handled to some of the things that you're talking about. I've never even heard of. So yeah, I just really appreciate you for coming on here and just
Man, listen, I want to bless the people. That's what I do. You know, I was an educator in my former life. I taught for 15 years. Mm-hmm. So to get out of that and get into this, I'm still teaching. You know what I'm saying? We're just teaching on a subject that we probably should be teaching in school, but I get to do it on a consistent basis to many people. And I'm glad I got an opportunity to do it.
I am too. Jessica Jones says, is Kemper Life one of your carriers?
It is not. Never heard of it. Don't even know who it is. Sorry. Tell Jessica, post a little bit about it, because I have no idea. I've never heard of that. Now, listen, when I say I've got 20 carriers, there's over 300 carriers of insurance out here. You know what I mean? So, I'm only scratching the surface of the carriers that I know of. I just only I ain't gonna say the F word, but I only mess with carriers that are A+ rated, because my reputation is on the line. Right. And if anything happens and that policy doesn't pay out, well, guess who that family is coming to see? They coming to see me. So I want to make sure that I deal with companies that are A rated. They're gonna pay out in like 3 to 5 days. Like, families need that money ASAP. I don't need nobody wasting time with that.
Right. How do you feel? Jennifer Thompson says, how do you feel about global life insurance?
Yeah, mentioned it earlier. We had talked about it earlier. Yeah, I mean, if you like to be, screwed over, then great. You know what I'm saying? Absolutely. It's a great company for screwing people over. Like I said, I've ran into some situations where I've seen them do some skittish type things, and I've also seen them not pay some policies out. So, like I said, I don't necessarily want to talk bad about any company. I just know some of the experiences that I have dealt with, and hearing some of the horror stories from clients that I have now that have been a part of that organization, or had those policies that we actually got them out of because of some of the bad or the negativity.
Okay. So what else should we know about life insurance, John? What else should we know? Because this is your expertise. When I don't know what the hell I'm talking about, I don't get on here and try to pretend I know what I'm talking about. I hate when my good friends up and say, "Friend, do what you do." I need you because the people need you. So what else should we know?
Well, listen, man. If you have a household, an entire household, whether it's you, your spouse, and your kids, make sure everybody is covered. Don't be the only person in the house with life insurance. That's not fair. Get life insurance on everybody. And then listen, make sure your parents are taken care of. So here's what happens with term life insurance, y'all. I swear to God, I see this all the time. So parents, they do a good job, or people, let's just say people do a good job at getting life insurance, in like their 20s and their 30s, so forth and so on. But like I said, a lot of them will do term because it's the cheapest. Like, you can get $250,000 for a 30-year-old and female, and it'd be like, $40 bucks a month. And we're like, okay, good, we're covered. We got insurance, we're good to go. Well, you paid that $40 for the past 25, 30 years, not thinking about it. And then what happens is two things. That policy is then going to either lapse because it's going to end, or it's going to do what we call an auto renewal. And when it auto renewals, guess what? It's going to auto renewal at your new age, which is going to be like 30, which is going to be like 60. And so now that $40 payment is going to turn into about $150 payment. You see what I'm saying? Because we don't pay attention. Or it just cancels all together, and the parent thought that they had insurance after 60, and guess what? Now they ain't got no more insurance because nobody did their due diligence to check the policy out over time to find out when it ends, so that we can figure out what's the next.
That happens a whole lot.
Absolutely. Listen, I get this all the time. Well, about especially about the parents. Well, my dad said that he already has insurance. He done had it about 25 years. I'm like, did you just hear what you said? You said your dad had the insurance for about 20, 25 years. Let's just say rule of thumb, if your parents are in their 60s, then their policy has either lapsed or it's getting ready to lapse within the next 3 to 4 years or so. So you need to start checking on those policies and have another plan moving forward and getting some final expense, because the term policy has done what it's supposed to do. All right, it's taking care of its business. Your folks still here. Now we got to get them into a final expense policy after that term policy is up.
Okay. Jessica Jones says, "What about riders for kids?"
Riders are good. I love riders. Riders are great for the kids. Only thing about the rider is when that kid turned 18, he's off of that insurance policy. That he's no longer covered by the insurance. So it's good to do a rider when a child is young. Just
okay.
born.
What is a rider for the people that
So
don't?
first, great point. A rider is basically like an add-on. So let's say you go to McDonald's, right, and you want to get a number one, an extra value meal. So the extra value meal comes with the burger, the drinks, and the fries. Okay, that's basically what a rider is to an insurance policy. So it's the insurance itself that I have on myself, and then let's say I want to cover my kids and my spouse. That'll be the extra value of that policy. So a rider is just something that rides along with the main insurance policy, like the kids term rider, call it a child term rider. So as from 0 to 18, yes, you have access to be able to do that. But then after they turn 18 years old, then that term rider no longer exists. It's over with.
Okay, you see Tamara comment. Tamara says, "JB, I need to get with you on my parents and grandparents. Make sure they have the best."
Listen, I got you. You listen. You already know, love. Come on, classmate.
Right, I say, look, that's family.
Come on. I just got Tamara. Look, Tamara just became one of my newest clients as of last week. So yeah, we're gonna take care of her parents and grandparents. We're gonna get everybody set up.
Okay.
I got you.
Chantel says, what all does final expense cover?
Everything related towards final expenses. And what I mean by that, that's anything that's dealing with the burial. That's the casket, that's the headstone, that's the opening and closing of the tomb, that's the space itself, that's the funeral service, could be transportation, the repast, any and everything dealing with basically sending someone home to glory to go be with God. That is considered a final expense.
Yeah, we learned so much. Y'all keep the questions coming. Whatever you can think of, whatever you want to know, use this opportunity as a time to just really just gain all the knowledge, because I mean it's a wealth of, man, dude. You just sit up here. I'm like
listen, tell your people, look, they can call, I'll say text me because I'm busy, so text me. But listen, get your pen, get your paper, write my number down. Listen, I'm giving y'all my number now. I don't do this.
Now look, it's gonna be thousands.
But no, I got my business phone, so they can text me or call me on my business phone. But that number is 404-857-2727. 404-857-2727. Man, listen, I'm all about trying to make sure our people taken care of. And when it comes to that, it's a passion of mine. So y'all hit me up, because I like I said, if I can't get it done, I know several people that can get it done for you. Trust me. You may not have coverage, but within 1 or 2 days, we get it done.
There you go. So The next thing that I want to talk about, and whatever questions y'all have, y'all just, and he probably done already answered some of y'all questions, but
ask them anyway.
The next thing I want to talk about is child wealth accumulation.
Yep.
Which is so important. And when I was talking to you and you was telling me about that, baby Tamara is bigging you up. Period. Period. When you were talking about child wealth accumulation, when you speak about that, what exactly? I know what it means, like in terms of what it means, but how do we go about accumulating it in the terms that you're speaking of?
Well, listen, let me tell you this. Let's start this off by saying this. You can't save your way to $1 million. Okay, so let's go ahead and make that a disclaimer. I don't care how much money you put in the bank to try to save, you will not save yourself to generational wealth. And here's the reason why. Interest at the bank is not your friend, because the bank does not pay you enough to keep your money inside of those four walls. Now, is there a need for the bank? Sure, absolutely. We know that there's a need, but if we're talking about accumulation and building cash reserves off of the bank, then you're sadly mistaken. You're going to get like a penny a year in terms of interest with your money in the bank. So how do you accumulate money? How do you accumulate wealth? You have to leverage your money. Okay. You have to leverage your money in financial vehicles that are going to generate enough interest so that you can get what's called continued compounding interest. That means that my money is every day compounding to a certain degree. That means every day my money is making me money, and I ain't doing nothing but just sticking money into that financial vehicle. And by doing that, the next thing is time. You have to do that within a time frame, or do it in having enough time to where it can build itself up. And you have to do that and be consistent at funding those accounts. Now, let's talk about what vehicles will do that for you. The Index Universal Life Insurance Policy. Okay, Index Universal Life. Okay, here's why. How many? Let me ask you your people this. How many people like to put their money into something where they know they're going to get positive growth and never lose money? I know I do. That's what I do. I want my money in something where I'm going to be guaranteed it to grow, and I ain't ever got to worry about it losing money. Right. Well, that's what the Index Universal policy does. It allows you to be able to fund basically it's a life insurance policy that you can fund it, but the interest grows based off of stock market indexing. So it's almost like me being able to put my money in the market without worry about taking the losses of the market, if that makes sense. You know what I mean? It's like I can play with the market and get some of the mirror growth, but I don't have to ever worry about losing. Absolutely. I don't know about y'all, but at 40 years old, I don't like to risk my money for shit.
Right.
Just saying, I don't want to risk. I risk my life every day growing up in Tomerville. I don't want to risk my money. You know what I mean? So I want to put my money into a vehicle where I know I can get 8 to 10 to 12% growth on a yearly basis. And if the market performs terribly, then zero is your hero. You don't lose money. So that's the way that you are able to do that. Now, you gotta fund it properly. You can't talk about $50 and growing generational wealth. It just doesn't work that way. Okay. Right. When I mean fund it, you have to fund it. We're talking about $150, $200, $250, whatever. This you can do it on a yearly basis. You know, some of y'all getting them $6,000 tax return checks. Y'all better drop $1,500 into your baby's index universal life insurance policy every year and help that thing grow. At the end of the day, you want your kids to grow up. I tell my kids all the time, I want you to be like Barron Trump. I want you to grow up and have money.
Right.
You know what I mean? Ain't nothing wrong with that. I don't want you to struggle out here. So I want you to wake up to the money. And that's what the universal life insurance policy does. It allows you to fund it, get growth based off of the stock market, take all the gains, but then you don't have to worry about losing any of it. And by the time your kid turns 30, 40, 50 years old, we're talking about $700,000 sitting in your cash value account with a death benefit over $1 million. Why would you not do that?
So when should you start that?
Immediately.
Okay.
Immediately. I did one on a newborn last week. The week before that, I had another one of my clients. She set up two. One for her little boy, one for a little girl. I think the little boy was 7 and the girl was like 5. So what they're doing is they're putting money into these policies. So when they think about this, when they go to college, they're going to have $200,000 sitting inside of a cash value account that they can use to pay for school. Why not?
Right.
You know what I mean? Ain't no loans. You don't take no loans around here. No. We're not doing that when you've got ways of going about funding these vehicles. Yeah, listen, I'm giving y'all $1 million game right now. I hope y'all
really are. You really are. You really are. Tamara, I'm telling you, because look, for real, this is something that we wasn't taught. She was like, this is the education she needed back when she was young, so she could be rich right now. So
facts.
But we didn't know.
We didn't know.
I
tell people all the time, man, I can't blame my mom because she just didn't know. And I know if she would have knew about this, she would have set me up. But she didn't know. And the thing is, everybody else knew. The other folks, they knew. But I ain't mad at them. I ain't mad.
Because once you learn, then you just do what you got to do to set up for your kids and do what you got to do for you.
That's why we put the info.
What are other ways? Are there any other ways through what you do that children can accumulate wealth?
Yeah, I mean, well, that's going to be the best way. In my opinion, because like I said, you're going to take all the advantage of the growth and not have to worry about losses. I do see parents start to put money into what's called mutual funds, and mutual funds are good. They're good. But the thing about a mutual fund is there's just too much, for me, there's too much volatility. It's too much risk. Well, let's talk about what a mutual fund is. Basically, a mutual fund is we're going to take 5 or 6 different companies that are traded on the stock market. All right. And what we're going to do is we're going to set up an account so that when I pay my monthly premium into that mutual fund, well, then however those companies perform, that's how my money is going to grow. All right. Now, the good thing about that is it's great when all the companies are doing well and the stock market is doing well. But baby, when that stock market crash, you in trouble. You know what I'm saying? So it's a great tool. You always want to diversify your portfolio. And what I mean by that is, have some mutual funds, have a universal life insurance policy, have a term policy, have a savings account and a bank account set up. You want to diversify your portfolio because what you don't want to do is stick all your money into one thing and that one thing goes bad. And now we've just killed our nest egg and we don't want to do that.
Right. Jessica Jones says, whatever happened to bonds?
So bonds got what's the word I want to look for here? The word is they became obsolete because there was so many other products got developed over the time that kind of passed the bonds by. Bonds were great back in like the 70s and the 80s, which is why you saw a lot of like your grandparents left bonds when they passed to their offsprings. And you may have had a $25,000 bond that your grandmother had been saving since the night, the late 50s, early 60s on through, when they passed away. But the bonds, they don't carry enough leverage, meaning that they don't grow enough. You know what I'm saying? It's just like putting your money in the bank. It's like a CD almost. CDs, bank accounts, and bonds. The
money.
right, the percentage of the interest just doesn't put in enough to leverage your money to be able to create what we need now, guys. Y'all listen, inflation is real. Inflation is real. So if you don't have something that's going to be able to adapt to inflation, then you're gonna lose out 9 times out of 10, and that's what a bond did. It just lost out because everything kept getting higher and higher and higher and higher, and it just wasn't enough to cover.
Okay. Tamara says, what about trust funds?
Trust funds are good. Listen, here's my favorite setup when it comes to life insurance and trust funds, right? So when I tell people, listen, you can create your own bank, right? Your own family bank. Like you can have like the John Beverly Bank of Georgia. And they like looking at me like, well, how you do that? And they say, listen, you go open up, get you a family trust started, right? And what you want to do is you want to put life insurance policies on everyone within your immediate family, husband, wife, kids, brothers, etc. What you want to do with that is you want to take about a third of that life insurance policy and you want to have the trust as the beneficiary. And then everything else goes to whomever the main beneficiary is. But when your people start to pass away, then guess what? A third of that money goes into the family trust, and it builds up over time, over time, over time. Every time someone passes away, you got money going into the trust. When people are born, you put the policy on them. A third of that money goes to the trust. And so now what happens, you have a trustee or a person that's over the trust. And when your family needs to borrow money to do projects or put, down payments on homes or, help build a community, then guess what? You ain't got to go to the bank and ask them for no loan. You got your own family trust. You got your own bank. Go to the trust, get the money out the bank. That's the way we got to start thinking nowadays.
That's what Gone said. That's where them white people had that shit set up. Go ahead on the say. I already know what you wanted to say. I already know what you wanted to say. I already know. You said, look, the white people on here, they understand, they get it. They know that's what that's look. That's what it is.
Because look, because last thing is like I know when a person who looks like me go to the bank and ask for a loan, I gotta have A1 credit, I gotta show collateral, I gotta jump through all these hoops to borrow 100,000 or 150 to whatever the case may be.
Right.
And that becomes redundant and excessive, and it can be heart-wrenching when you get denied. So that's why we have to start setting up trust so that we can just alleviate that whole situation and just go straight to the source. Get the money out of the source.
Straight to the money. Well, look, John, our hour is up.
Dang, we already.
We gotta do a part 2.
Yeah. Oh, ain't no doubt.
We got to do a part 2 because look, we hadn't even scratched the surface
Not even
of the information that's in that damn head of yours. We haven't even scratched the surface of the wealth of knowledge that you out here just like this is real tea. Like he just spilled some real tea. Like this the real tea. It's the real tea. But look, we're gonna have to do a part 2. We gotta do a part 2 because I don't want it to be so long where people don't want to watch the whole video. I need them to watch the video from the first moment that we started until the very last moment of this. So this is Tamara. One last question because this is a very good question. And I got it up here. One last question before we go. Okay. Just to say, where is the starting point for the poorest?
Yeah, so listen, you gotta do what you gotta do. You gotta start somewhere. It ain't necessarily about being able to put. Listen, I know I said you have to fund these vehicles and fund them correctly. But listen, sometimes we have to just do what we have to do just to get started. Just because we start somewhere doesn't mean that's where we're gonna finish.
Right.
So we have to start somewhere, whether that's $50 a month or $75 a month, whatever the case may be. Have that set aside, and then listen, get out of the mindset that funding these policies is a bill. This is not a bill. This is funding your legacy.
It's an investment,
right? This is not a bill. Come on, guys. That's a lot of a big thing with us. Like this is a bill. Well, I tell you what's going to be a bill. Dying without a life insurance policy is a $10,000 to $15,000 bill. So you tell me which bill you want to pay. But in terms of the poorest, just start somewhere. You know what I'm saying? Like I said, $50, $75, whatever. And then, hey, just gradually start to increase, as you can. The thing is, we just got to get the ball rolling. We're never going to build up if we don't get started. So we have to get started somewhere.
And on that note, John, thank you so much for coming on here and doing what it is that you do. Thank y'all so much for joining me this evening. Share this video. Share this video. Share this video with everybody that you know. Share this video. If you had never shared a video that has came from somebody's business, make sure this is one because a lot of people that watch somebody's business, they end up having bucket drops. And they end up having fish fries at the church and try to go out their way to try to get the money to bury them. So make sure y'all share this video. I love y'all so much. I love everybody that love me. Y'all know I with everybody who with me. And we're gonna do a part 2. And thank you so much for coming on here. I really appreciate it.
Yep, y'all go follow your boy, man. Make sure y'all follow me on Facebook, John R. Beverly Jr., Instagram at Beverly Financial, man. Appreciate you having me on.
And on that note, we'll talk to y'all later. Bye-bye.